So Vehano and Nick, we're so excited to have you guys on the show. Thanks for joining us.
Yeah, thank you. Glad to be here.
Yeah, excited to be here. Thanks for having us.
Well, to be honest with all of you, I'm feeling a little bit left out because I know Adam, Nick, and Vehano are all partnered up together in a group, and I'd love to learn a bit more of that background, how that came to be.
Yeah. Well, I'll kick it off. Nick and I, we started, just over 2 years ago, and we're looking at multifamily real estate, and we ended up buying some units together, 7 unit, and a 14 unit, and then you start to run out of your own money, and we realize, okay, well, next step once we've proven the concept would be let's go and invite others to invest, and it all starts with that friends and family. So that's kind of
Right.
we just reach out to your friends, and that's how we've met Adam, and it's been pretty fantastic thus far. I don't know if Nick, you want to add on that?
Yeah, I mean, I actually met Adam, I don't know, 2.5, maybe 3 years ago. I think at a local RIA here in Tampa, and very like-minded. We had kind of the same goals. We looked at a couple deals together, and I think nothing really just kind of panned out. And I met Vehano, and we kind of built Dreamstone and did a couple deals. And then when our first syndication came up, I was like, hey, I know a great guy who wants to do a big deal and, has developed a brand for himself and, has the ability to raise capital. And that's kind of how the three of us all got together. So then we just keep doing deals after that.
Well, that's fantastic. Well, thank you for sharing. And Adam is definitely the right person for the job. So I'm glad that he's found all of you guys and is accelerating his progress. It's been fun to see and proud as a co-host.
Awesome. Yeah, thanks. And from my end, it's been great. I mean, I just feel like it's been an awesome experience all the way around. So good stuff.
Now, you touched on you've been working for a couple of years and the team just kind of grew organically. What is the importance of finding the right team members?
Yeah, I think it's monumental to all of your success, right? It's who you surround yourself with, really accelerates your growth in any aspect of life, whether it be investing or just life in general. So finding the right people will definitely increase that velocity, if you will. And you definitely know when you found the wrong people, because it's more of a drag on you, and
Sure.
kind of like an air parachute kind of thing.
Yeah, I agree with that too. I mean, team members can just make all the difference in the world. And what do you guys think makes a good team?
Nick, I mean, do you want to go?
Oh yeah, I was going to say, having the right team members is, the ability to expand upon, other people's knowledge too. And what makes a good team is knowing like everyone kind of is working towards the same goal too, right? So, and the ability to hold each other accountable, but not have to worry that, hey, like I have to follow up with this guy every day kind of thing. Like you can kind of give that person, delegate them a task or something like that, and you don't have to really worry about it because the stuff's going to get done. So that's kind of how Vehano and I have worked out pretty good on. He handles the financial side, acquisitions. I handle more of the CapEx operations, and I think we kind of built a pretty good team doing that.
Yeah, I think it to expand on that, it's really just playing to your strength, and whatever I'm not good at, I better make sure that I have a partner that can handle that aspect that I'm not an expert in, but certainly helps strengthen the team.
Exactly. I think you touched on a great point about playing into your strengths. You can't do everything, and it's impossible, and you want to try to do it, you'll eventually just run out of energy, run out of time and resources. So finding the right people is huge. And with that, how did you establish, okay, this is what I'm good at, this is what I'm not good at?
I mean, yeah, it's kind of like trial and error, right? There's no like crystal ball, like, oh, I'm just brilliant at this. You gotta do.
Right.
And you learn by doing, and you're like, well, I don't really like this. And once you get focused in on and zoned in on like, man, the truth, right? I'm good at this. I'm not good at that. I'm like, I don't know how much it costs for a toilet. And I was like, shoot, I need to find somebody that knows how much a toilet costs, because that's going to accelerate us. And then I met Nick, and that really helped in terms of like understanding the cost side and like kind of the renovation stuff. So yeah.
Yeah, I always feel like when you just feel it and you love it, you love the activity and then you're working in your sweet spot, you're in flow, right? And then when you don't like it, but someone else on your team is awesome at it and you realize they love it,
yeah,
they're in their sweet spot, they're in flow. And then now you just realize, wow, you're an awesome team because you're filling each other's gaps.
right.
Yeah, no, I can definitely. I go cross-eyed when I look at spreadsheets. So I am totally a field guy. I love being outside and working with people and being hands-on on projects. And I can handle a spreadsheet for creating a renovation budget and going through that kind of stuff and timelines. But when it comes to like Vehano and I go over underwriting almost every day, and I'm just like, oh man, I can't wait to get this over with. So that helps having him as the financial guy to be able to have the ability to sit there for hours and plug in numbers and we call it playing with different levers of seeing how does this affect our model and different things like that. While I can go out and do research of what does it cost to install a toilet with vendor A, B, and C, and where are they getting their products from and who has the cheapest products and stuff like that, and then running our projects as well, on the
Sure.
on the properties that we have. So I don't think Vehano wants to do that. Look at him, he's wearing a nice jacket, so he looks like he's from corporate America, so he fits in well with the finance stuff. So but for me, like I can't do it. I don't have the capacity to sit there and plug in numbers for hours on end. So yeah.
To harp on the team aspect a little bit more, how do you recommend people go about finding the right team members?
Yeah, I think Adam kind of alluded to it earlier. I think you just kind of, when you have that right positive vibe and that positive collaboration kind of thing going on. I think that really stands out to me personally when I see people, collaborating and they add value to each other, and it's like
right.
It becomes that flow where you're not like, well, I wonder if Adam's actually going to do what he said. No, it kind of just complements each other. So it's something that it doesn't happen overnight, but you certainly you've got to do to learn, right? So
right.
Take some time.
So switching gears just a little bit, guys, what made you decide to focus on real estate investing? There are lots of types of investing, and you're both clearly very focused on real estate investing. Think back to when you first got started. What was it that made each of you kind of focus on real estate?
All right, Nick, do you want to go?
Yeah, I mean, I've kind of always been interested in real estate. When I'm originally from New Jersey, when I moved down to Florida with my parents, my dad pretty much flipped every single house that we lived in. So we would move pretty much every year to a year. I think I've lived in 16 different houses since I've lived in Florida. So my dad would buy them, relatively cheap. I don't know. I was too young to know how he was sourcing the deals. And basically we'd live in it, flip it, move into the next one. And that's kind of how I got my first touch into real estate. And so, yeah, I kind of wanted to do something in it. But then I kind of got to college and I was like, maybe I want to be like a doctor or something like that. So I kind of followed that path and ended up not becoming a doctor because that was really hard. So I ended up getting kind of a finance and project management degree essentially, and went and worked for a construction company basically that would build temporary racetracks for IndyCar. So that was kind of my first taste in construction. And the hours aren't great at that because what we're doing, and Adam's familiar with the St. Pete Grand Prix that we have in downtown St. Pete, we're building racetracks on street circuit, on residential and street roads. So people aren't happy about that. So our schedules are very tight and long, a lot of hours. So after about 2 years of doing that, I got into home building, and that's kind of what got me more into real estate of like, I really love this process and building homes and seeing someone go from dirt to, a whole house that someone's living in just a matter of months. So, but then the kind of same thing, hours. I was waking up at 3 o'clock in the morning to go pour slabs at 4 and 5 o'clock in the morning and not finishing until 7 o'clock at night. And so I started listening to podcasts and was like, all right, multifamily, that's what I want to do.
Awesome. Vehano, how about you? How did you get started in how did you pick real estate as an asset?
Yeah, no, I actually do remember that day. It sounds cliche. You go over that, I read Rich Dad Poor Dad, but I actually did.
Yeah.
and it did. I'm like, man, this is right. An asset puts money in your pocket, a liability takes it out. And, and it kind of rearranged the way I thought about finance and kind of investing, because you're looking for cash flow, right? And you want to replace that income. And it's very important that you make that and get out of that appreciation mindset, which is what the stock market is all about, at least from what I've been taught. And I'm originally from South Africa, and your house is really, that's the only real estate investment you had. And I didn't really know about anything else at the time. And when I came to the States, I had the 401k and all that, the typical corporate, kind of, you don't even make any choices there, so you have no control. And after a while, I just realized, like, well, this is not really, there's no control here. There's no cash flow in this, and there's got to be a better way. And I didn't know what it was, but I knew I needed to figure out something. And it just, that you set that intention and things just start to flow. And next thing you know, you're looking at single family homes, and I'm like, we can buy this. I'm like, cool, let's look at single family homes. And then I realized, my background being, a CPA or chartered accountant, more risk averse. So I was like, well, if somebody skips out, you have one person living in the house, and now you on the hook for the mortgage. So, I looked into multifamily. I was like, wow, this is great. Okay, so if you have 4 units, one person moves out, the 3 other units pay for it. Boom. I like that. So that got me going down the multifamily path in the beginning, and I started with a duplex, and I still have it to this day, and it's cash flowing nicely, and just onward and upward.
Never look back.
Awesome.
Now, for the multifamily aspect, I love that you both are coming at it from different perspectives. Where Nick, you're saying that, the hours sucked for laying down concrete slab. You look for something a bit more structured. And then Vehano, you're talking about the risk aversion. So I love that the personalities are coming to the same conclusion, but from different perspectives. Now, why would you, or I guess, what are some arguments for investing in multifamily versus, say, something like single family?
And Nick and I have this debate all the time. It's not a debate, but some people kind of force you into sticking to that niche, or
right,
sticking to that one thing. Now, one could argue real estate is one thing, but there's just so many different aspects of real estate, different components that you can invest in. So once, I think, from a understanding the business and understanding the kind of the game, if you will, multifamily gives you that background of commercial real estate, and getting you to the point where, well, if I do a office block, or I do an industrial complex, or I do student housing, they all get valued on the same kind of basis, net operating income, the cap rate. But they are completely different in terms of their risk profiles. So multifamily, for me, it was a logical choice to get across that risk aversion, and also just that scalability of having more doors and one roof. But we're finding now that we're buying all these garden complexes, you still have a bunch of roofs anyway. So the scalability is there. And then single family, hey, if you do it right, there's a lot of people that have a success in that too. So I don't knock it. I just it's something that as long as your money's made when you buy something, or buy the asset, right? And that's the key, I think, for me. So we've cut our teeth in multifamily, but it doesn't mean the other classes aren't just as attractive.
Sure.
Yeah, exactly. My thing was kind of the vacancy thing. Obviously with multifamily, if you have 100 unit and one person leaves, you still got 99 people there to pay the rent, right? So
sure.
in a home, that one person leaves, you are you are on the hook for all the bills that month, basically, you know. So, but as we've kind of, John and I have been teaching ourselves about single family portfolios and everything like that, and it does seem to be that people who do rent houses tend to stay a lot longer, usually 2 to, I don't know, we've seen some numbers 2 to 5 years, just depending on the submarket, right? So, so we're kind of like learning, you know, seeing, you know, how does single family work versus multifamily, and, you know, is it a business model that maybe we want to take on eventually too? So, so yeah, so that was kind of me up front, and that's why him and I went back and forth a lot. Was mostly the vacancy issue, and sometimes with single family you get scattered a lot, right? So you can't just buy a whole neighborhood typically unless you build it yourself or something. So, so that was kind of the other advantage that multifamily had is, for me as the operations guy, I only have to make one trip. I don't have to make 20 in a day or something like that, right? So that was kind of like my thing.
Yeah, and then scale too is a big factor. You know, I mean, with a 100-unit property, you know, like you said, it's all in one location, and if you have to replace something in the unit, if they're all the same type of thing, you've got these economies of scale that go with some of that, and also just the ability to scale up. You know, I think like one property manager on site for 200 units versus 200 individual locations, and so that's also an advantage of the multifamily in my mind.
Absolutely.
So with all the markets out there, you mentioned submarkets. What makes Tampa such a hot market to invest in from a multifamily perspective? And of course, I'm not asking to the recipe to your secret sauce, but just at the high level, if somebody's interested in, say, investing with you guys, what's the argument for Tampa is a great market?
Yeah, I mean, you know, we don't have, you know, crystal balls in the future to look at the future and all of that. So you look back to history and you see kind of what are the historical trends, and, you know, where you can project those trends to, and learning from our mentors and people that have done this, you know, have gone through multiple cycles and all those kinds of things. You kind of, you want to learn from their mistakes and go from there. So one of the key things is positive growing population, positive growing employment, and Tampa's just been really phenomenal. You know, almost like one of those, you know, unkept secrets for the last, like, you know, 10, 20 years as a, you know, Florida as a whole, you know, market, the southern Florida, you know, South Florida kind of is your institutional, you know, kind of investor, and then, you know, the more central, and, you know, get Orlando, which became institutional, and then nobody really paid too much attention to Tampa. And now, you know, you look at affordability and you look at, you know, what's to offer, and it's just really a great place where it, you know, has lifestyle, you know, recreation, has employment, and the cost of living is relatively cheaper compared to the rest of, you know, Florida, Central Florida. So yeah, we're very bullish on Tampa and the growth, and yeah, it's a great place to invest. I think, I don't know the stat, but I think there's something like, there's like 30 people moving there, net 30 every day or something high. Wow. Like that. I don't forget the stat, but it's really, really something interesting.
Yeah, migration seems to be coming to the South in general, and specifically to cities like Tampa. So I'd like to shift gears here a little bit. You guys, I've seen this up close, but anyone who knows you guys have surely seen that you seem to have moved fast, and you're gaining a lot of traction, and you're, you know, experiencing some success and growing. It's fantastic to see. But doing some of the things that you guys are doing right now and plan to do are really scary to someone who isn't there yet, or say has nothing yet. Like maybe they've got like a rental house, and then, you know, you guys just took down a 56 unit property. What are some self-limiting beliefs you've had that you feel like you've had to break through to be able to take on something like that confidently, like you have?
Yeah, I think just like not even like, where am I going to get the capital from, and, you know, how am I going to do this? What helped me was, how can I flip that question? What are the things I can do today that can let that help me acquire that property. So yeah, we were all there, we all spoke, got on the phone with brokers and sounded like idiots, and they hang the phone up on you. It just takes time, and like any good craft, to master it, it's practice, repetition. So don't give up, guys. It's all in the doing.
Yeah, in the action part. That's awesome. That's good for listeners to hear who may be thinking about it. They want to, but they're just afraid to dive in. Just take action.
Yeah, I would say the same thing, taking action. And luckily I've got a great partner in Vehano who's a great visionary, and I believe in his vision and our shared vision and what we want to grow to. And that just kind of gives you like some, I don't know, gives you confidence, like, hey, like we actually got something here and we can do a lot of good things. And it makes you wake up every day with kind of a purpose of like, okay, we're out there, we're getting good returns for our investors, we're creating a good, affordable, safe housing for people in the submarkets that we own properties in. And so, but from a limiting belief standpoint, I mean, you heard me say earlier, becoming a doctor is very hard. I don't think I'm the smartest guy in the world. So, just being able to be an average guy that can go out and do this kind of stuff, it really just comes down to like taking action and, reading the books, take that knowledge and then go apply it too. So, or listening to podcasts or whatever. So whatever your format may be.
That's great.
I think one of the most difficult parts about trying to do something on your own is you are limited by your own motivation and inspiration, and discipline can only go so far, right? That work ethic is not really ingrained in everybody.
Mm-hmm.
So how do both of you help motivate each other? If Vehano calls you Nick, or vice versa, or even the three of you, if you're feeling kind of in that funk, how do you help bring each other out of it?
Well, I think it comes down to structured planning, being organized. I think, holding each other accountable. What I know, what's helped us tremendously is having, different, almost like steering committee meetings and different meetings at different points where we look at our week ahead and we say, these are the things, the outcomes that need to happen this week to get us to our goals, right? So, these are the 5 top things that we need to do. And we've, obviously not perfect. It takes practice to get that right 100%. Right. But, be getting those tasks and kind of milestones completed really helps us stay accountable to each other, right? Because if I know I've got I need to call 6 brokers this week, or I need to call, this broker that I haven't spoken to in a while, I've got to do it. And because I know I'm going to let my other partners down, and that's kind of what's keeps me accountable in our business.
Sure.
Yeah, having each other helps a lot. Like, you guys having each other, and just knowing that you've got a partner, that helps so much.
Yeah. And this game isn't multifamily. You could do it by yourself. You'd burn out.
Yeah.
There's just so much
hard
to do. So, again, it's a team sport. Get the right team, and just go. I mean, take that massive action.
So we've been able to attract a lot of investors to our deals and to Dreamstone. To what do you guys attribute that?
Yeah, again, I think it's just we love what we do. We love what the impact we have on our communities that we decide to invest in. I think it's one of the most important things is, yes, it's about creating this return for our investors, but as Nick touched on earlier, we actually providing safe, affordable living space for people that want to, pay the rent, people that want to live in those areas. And it brings you joy once you've cleaned out, not so savory tenants, and it's the horror stories we could tell you, but the smells and the
Fleas
and the fleas and the broken walls, and yeah. So but the reward is in repaying that and making this beautiful, livable space again, and just seeing, people really, thriving. And I think that for me is pretty important. And I think hopefully that translates to our investors that, they want to come on this journey with us, where we can go in, make a great return, but also leave a place better than what we found it.
Yeah, that's fantastic. I love that. The idea of improving it. People see that. I mean, they see that you care, you know, that you care about people and you're adding value to the world. And that definitely attracts people. Nick, anything you need to add to that?
Yeah, I was just gonna say, I think it has to do some of it with our team. You know, we've kind of talked about it a little bit already. Vehano's a great finance guy. I'm pretty good construction guy on sometimes. You know, you're really good at communications, investor communications. So, and, you know, we have a great law team with Robinson Law, and our property management company, Meadowwood, is fantastic to work with. So I think having those team members and showing, hey, this is how we're going to do this business plan. And we also articulate like, hey, this is the timeline. These are the potential issues we may run into along the way. And I think being transparent about that helps a lot, because it lets people know like ahead of time that, hey, if a bump in the road comes, like they let us know and they actually predicted it or something like that, you know? So having the transparency helps a lot. And I think, you know, also the deals that we find, you know, we've been pretty lucky with our deals. And, so yeah, I think it kind of all those things come together and, you know, hopefully get some investors that really like what we bring to the table.
And speaking of the properties and adding value, when a property comes across your desk, what are the high level markers that say this is a good deal? We should go in, purchase it, and add value to it.
Yeah, I think, you know, I probably get like, you know, 10, 20, 30 deals a day. It's just, we went touring on last week, and you know, I think we looked at over 900 units, and you know, what really stands out is, hey, you know, one, can I add value to this property? Is there an opportunity, right? Because what we don't want to be doing at this point of the cycle is buying something that's fully stabilized and there's no meat on the bone. And when I say meat on the bone, is there a loss to lease that we can capture? So if the rents are below market because of, you know, the types of finishes or the types of amenities at the property, what can we do to add that value and then also capture that loss to lease, or even that premium to lease? So, you know, that's the number one thing I'm looking for in value add today. And then, is there any mismanagement? So, you know, are there opportunities in the cost savings, right? So that's where you really you get down to the, you know, the nitty gritty, and you look in the expenses and you're, whoa, why are they paying so much for water? Or you know, why, you know, there's a leak here. Someone needs to go close the tap, you know, something like that. So that's what I look for every day.
So you're finding a problem to solve.
Always got to solve a problem. Got to solve a problem by adding value, and that's how you become successful, right? I think that's like a fairly generic term or formula that we've been following, but you know, it really is. We are problem solvers in our multifamily real estate. There's always something that pops up, and you've got to be, you know, creative. You have to be able to be agile. You have to be able to you know, to be able to come up with some sort of solution to solve, to, you know, get the deal done, or
right.
Yeah.
All right, that's great. So, guys, what advice would you have for someone who's interested in investing but isn't sure where to start? And a lot of times, we have a lot of listeners who probably work nice jobs during the day. They're high earners, and they've just been putting money into a 401k or a stock fund, and maybe they have some interest in investing in some real estate. But maybe they're not even sure what that means yet. What advice might you have for somebody like that?
You know, number one, it's education, right? As an investor in anything, you need to understand what you're investing in. I think a lot of us fall to that trap where you're like, oh, it's an index fund, that's fine, and they go up, and that's, you know, someone else is managing my money. But you know, nobody tells you about all the fees that they're charging and like taking away from your returns, so you know, down the line. So you know, education is key. Listen to, basically immerse yourself in listening to podcasts, reading books, speaking to people, just networking with people. I think it's great going to the local RIAs. I know it's very single family orientated right now, but some RIAs are multifamily, and you can learn a lot from somebody that's way more experienced than you. And what I like about multifamily, people love to share.
That's
So
true. Yeah.
it's not a, there's so many deals, there's so many, deals and properties out there that, you can't do all of them.
Right.
So I think that there's a nice sense of camaraderie in that multifamily space where people will give you, if you ask, right? Don't be afraid to ask. If there's, you know, so most of the time people, will give you some good advice.
Yeah. Yeah, reading, education, networking is great. Bigger Pockets is a great resource for any type of investing that you want to do in real estate, really. So, and that they also have lists of books that are about the specific type of investing that you want to do too. So, going there is a great place to get an idea of if you don't know what you want to do in real estate, that can kind of help you narrow that path, and kind of get you on the straight and narrow of like, okay, I want to do single family, multifamily, flips, etc. And then you go and find the people that do that. And like Vehano said, most people in the real estate space are usually pretty good about sharing information and sharing their teachable moments or something that they've learned along the way. So I've got plenty already. So, but yeah, so that's a great way to get started.
Yeah, that's solid advice. And, I wouldn't be where I am if I didn't go to those networking events. Nick, like you said, you and I met at one here in Tampa. And, not only do I feel like I received some education from going to those, but I made these priceless connections, relationships. And so those networking events like your local RIAs or meetups or whatever can be so valuable.
And it's powerful being around like-minded people, right? It's
Yeah.
really
Absolutely.
empowering. You get a sense of like, wow, okay, I'm in the right place. This is good. Or, wow, I need to step my game up. These guys
Right.
are it, right?
Mhm.
And that's awesome. Like that just makes everyone better. Investors, people, whatever. Yeah.
Absolutely.
Now, speaking of lessons learned, a lot of people learned lessons during the last crash, the real estate crash, stock market crash, economic crash, really. There are a lot of smarter people than Adam and I saying that there's something coming. Because of that, what would you say to a newer investor or experienced investors? What would be your advice in staying safe in the upcoming correction or crash?
Yeah, I think, my argument to the whole cycle thing is everything is in a cycle. There's always going to be an event. But what I've learned from some of the most successful investors is don't don't sit on the sideline. You've got to go in and analyze and understand and find opportunities. It's just going to be a lot harder,
Right.
but there are opportunities. I think for us in the multifamily space, even in the smaller plex space, as long as you are targeting you know a property that has where you can improve the value and increase the value of the property, that's what we tend to focus on at this stage of the cycle. So if the property is severely under market and there's a reason and we feel that we have the capability to go in and improve that property, that's what we're doing. And it's not the sexiest deal, it's not it's not the nicest deals out there, but sometimes those are the ones that make sense, and the ROI, is justified because you put in that work. So yeah, I think it's finding the value add, finding the below market. Probably stay away from the at market stabilized deals. I think that scares me in this the cycle.
Yeah. Now, just for those who may not know what a market stabilized deal is, can you kind of tell them in layman's terms
Yeah,
what that means?
the unit's already renovated, it's already cash flowing at 100% occupancy. There's not much more you can do. Now you do find ones that have opportunity where they might have been improved, but they haven't been leased up. So you can go and execute the lease up process. So there might be some sort of margin in there. Usually it's lower than actually going in and adding in the granite and all that stuff. So, stabilized deal, that's more for the hedge funds and the pension funds that, they want their 4% return. And
Right.
that's it, so it's not for us.
All right, guys. So since you listen to our podcast, we like to ask every guest about a piece of tech. So we'd like to ask each of you, what's a favorite piece of tech that significantly helps you in your business?
Nick, do you want to go?
I mean, we have a couple. Sorry to fly in my room for some reason. I really like we just got a investor portal that we use. We got it a couple months ago, and I absolutely love it. It's amazing. It's got its own investor CRM inside. It's got email campaigns. It's got a way for investors to go in and see their own statements on the deals that they've invested in and see how the returns are and everything whenever they want. They don't need to, have to wait, in between business hours to call us or something like that. They can go online at any time and check. And it has a lot of back-end features for us to utilize as well. So, doing distributions, we can do distributions through that portal and everything. So it makes life very easy compared to maybe some smaller syndicators who have to do everything through like a Google sheet that they have to keep track of or something like that. So it's kind of made our life a lot easier. And it also helps with like raising capital too, with any new deals that we have coming forward. It keeps track of all the documents. It keeps them, if an investor needs to be accredited, there's an accreditation process as well. And it's all set up with like they don't use DocuSign anymore, but to do digital signatures and everything like that. So it's a very easy process and well worth the money that we've spent to get it going and to utilize. So I absolutely love it because I'm in it just about every day. So.
Awesome.
Yeah. I think for me, because I'm more of the bigger picture person, the person that's driving us to our goal. I think what's been really cool, and Adam introduced us to this, is Trello and the Trello boards that we have, just to kind of see these are the deals that we're underwriting, and it just helps with seeing that process flow, kind of in which phase that project is, or that underwriting is, and we've used it for our own for our goals, and when we're planning out our week, we can actually go in and set the calendar kind of deadline on it, so hey, I need to get this done, or it's blocked off on your calendar. So I really enjoyed that, and yeah, it's been pretty good for our business.
Yeah, it's awesome. I'm glad you guys like that tool. I love Trello. I use it all the time.
Me too.
Oh man. So guys, thanks so much for coming on the show. This is something I've been really excited about for a while because, you're my team, and I thought it would be super cool to have you on the show here. So thanks so much for coming on. It's been great.
Thank you for having us.
Yeah, thank you for having us.